If you've opened your crypto portfolio in the past few days, you've probably seen one number that grabbed everyone's attention. Bitcoin below $60,000. Within days, billions of dollars flowed out of spot Bitcoin ETFs, liquidations accelerated, and headlines quickly declared the return of another crypto winter. But here's the question almost nobody is asking. What if the price isn't the real story? Because beneath this sell-off, institutional money is moving, macroeconomic pressure is building, and the Federal Reserve may be influencing Bitcoin far more than most investors realize. So before you assume this is simply another market crash, let's follow the money. Today, we're breaking down what really pushed Bitcoin below one of its most important psychological levels, why billions left Bitcoin ETFs, what on-chain data is quietly revealing, and whether this is the beginning of a deeper decline or the kind of reset that has historically changed the direction of an entire market cycle. Let's dive in. Welcome back. If you enjoy breaking down financial markets through data, not hype, you'll feel right at home here. This channel is built for investors who want context, not clickbait. Now, let's start where this entire story begins. Alright, let's address the elephant in the room. Why did the $60,000 support level collapse like a house of cards? It all comes down to spot Bitcoin ETF outflows. Back in late 2024 and throughout 2025, institutional money, the biggest players on Wall Street, supercharged Bitcoin to record highs. Everyone was celebrating. But over the past few weeks, those very same institutions have quietly pulled more than $4 billion out of spot Bitcoin ETFs. So why are they suddenly getting cold feet? It all comes down to the Federal Reserve's latest monetary policy. The market expected the Fed to begin cutting interest rates by now. Instead, inflation has remained stubbornly sticky, and the Fed is holding its ground. When interest rates stay higher for longer, institutional investors become far less willing to keep money in volatile, high-risk assets. Instead, they lock in profits and move capital into safer investments like US Treasury bonds. And unfortunately, that often leaves retail investors holding the bag. Now, let's connect the dots, because the crypto market doesn't move in a vacuum. The real culprit behind this Bitcoin sell-off is macroeconomics. The latest core PCE inflation data continues to point in the wrong direction. The Federal Reserve's target is 2%, but inflation is still running well above that level. Wall Street is now increasingly concerned that the Fed may not just keep interest rates higher for longer, it could even leave the door open to additional tightening if inflation refuses to cool. That uncertainty has triggered a significant liquidity crunch. In financial markets, liquidity is like oxygen. When the Fed pulls liquidity out of the system, high beta assets like technology stocks and cryptocurrencies are usually the first to feel the pressure. And that's exactly what we're witnessing right now. This isn't just a Bitcoin story. It's a macro-driven de-risking event. But this brings us to a major crossroads, and I genuinely want to know what you think. So, be honest in the comments below. Do you believe Bitcoin breaking below $60,000 is a once-in-a-cycle buy-the-dip opportunity? Or do you think the macro environment has become too fragile and we're headed toward $50,000 or even lower? Drop your price prediction in the comments right now. I'll be reading through them, and I'll personally reply to as many of you as I can. Alright, now that you've shared your thoughts, let's look at what the data is actually telling us. Because while the mainstream media wants you to believe it's nothing but doom and gloom, on-chain data is telling a very different story. Take a look at this chart. While spot Bitcoin ETFs have been bleeding capital and many retail investors have been panic selling, Bitcoin whales, wallets holding between 1,000 and 10,000 BTC, have quietly accumulated nearly 270,000 Bitcoin over the past 30 days. Let that sink in for a moment. And that's not all. Bitcoin reserves held on exchanges have fallen to their lowest level in 7 years. In simple terms, that means fewer coins are available for immediate selling. This is what many market participants describe as a classic Wall Street shakeout. Fear spreads through headlines. Prices move lower, retail investors panic, and stronger hands quietly accumulate. It's a transfer of Bitcoin from weaker hands to stronger hands. Don't let short-term fear force a long-term decision you'll regret. If you're feeling discouraged right now, take a step back and look at history. Every Bitcoin market cycle has gone through a phase that looked almost exactly like this. After the 2020 halving, Bitcoin experienced multiple brutal corrections of nearly 30%. Corrections that convinced many investors the bull market was over. The same pattern repeated itself in 2024, just before Bitcoin went on to reach new highs. The reality is, Bitcoin has never moved in a straight line. It builds momentum, consolidates, shakes out excess leverage, and then continues its longer-term trend. The correction we're seeing today remains well within the historical range of previous Bitcoin market cycles. Is it painful? Absolutely. Is it unusual? Not at all. So, what's the bottom line? This isn't the death of crypto. It's a macro-driven market reset. The real test for Bitcoin will come with this month's employment report and the Consumer Price Index CPI release. If the labor market begins to cool and inflation continues moving in the right direction, the Federal Reserve could finally have room to pivot. And if that happens, Bitcoin could respond much like a compressed spring finally being released. If you're a short-term trader, this environment is likely to remain highly volatile. But if you're a long-term investor, these are often the periods when generational opportunities begin to take shape. If you found this breakdown valuable, don't keep it to yourself. Hit the like button. It really helps YouTube recommend this video to more investors trying to make sense of what's happening in the market. And don't forget to leave your Bitcoin price prediction in the comments below. I'd genuinely love to hear where you think the market is headed next. If you know someone who's feeling anxious about their crypto portfolio, share this video with them. It might help them see the bigger picture. As always, stay safe, trust the data, and I'll see you in the next one.